What if I told you there's a stock that's flying under the radar, pays you over 3% in dividends right now, and grows that dividend by 10% every single year? And no, it's not some risky startup, it's a stable utility giant with a clean energy twist. I'm talking about NextEra Energy, ticker symbol NEE, and in this video I'm going to show you why this might be one of the most underrated dividend plays of 2025. Founded in 1984 as Florida Power and Light, NextEra Energy changed its name in 2010 to better represent its aggressive push into renewable power. The company owns the largest electric utility in Florida, serving more than 12 million people. NextEra Energy is also the world's largest producer of wind and solar power, selling the electricity generated from these assets under long-term contracts to utilities and other businesses. The company is currently available with a starting dividend yield of just over 3%, compared to its 5-year average of only 2.31%. Its forward price-to-earnings ratio is 19.1, which is below the 5-year average of 25.8 and only slightly above the sector average of 18.7. The fair value of the company is estimated to be somewhere between $88 and $108, while it's currently trading around $73.88, making it appear undervalued. The company currently pays an annual dividend of $2.27, distributed on a quarterly basis. The next payment is scheduled for September 16th, and anyone who owns shares by August 29th will be eligible to receive it. The most recent dividend increase was 10%. Over the past 5 years, the average annual increase has been 10.5%, and over the past 10 years it's been 11%. For the past 29 consecutive years, the company has paid and increased its dividend every single year. The company consistently keeps its payout ratio well below the preferred 75% level, even with such strong dividend increases. This suggests that similar year-over-year dividend growth is likely to continue in the future. Earnings per share has been growing steadily year after year, with an average growth rate of 9.8% over the past 5 years, which essentially supports the ongoing dividend increases. The company issues new shares each year, but this is completely normal for a business like NextEra and helps fund its capital investments. Return on equity hasn't been particularly strong in recent years, but there's no major cause for concern, and the same goes for the return on invested capital. The operating margin consistently remains above expected levels year over year. As for debt, it's an area that may deserve more attention in the coming years, but given the current economic environment, it's not surprising that leverage has ticked up a bit. Personally, I believe that once the situation stabilizes and the Fed eventually begins cutting rates, the debt picture should improve, though that likely won't happen in the immediate future. The company is currently available with a dividend yield around 3%, which represents a rare opportunity, especially with expected dividend growth of around 10% going forward, just as we've seen in the past. It holds an A- credit rating, which is considered strong, although some micromanagement may be necessary due to the current high interest rate environment. Overall, the dividend appears very safe, and the company looks undervalued at current levels. Disclaimer: this video is for informational and educational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions, and never base a financial decision solely on the content of this video. NextEra Energy kicked off 2025 with strength. Adjusted earnings per share increased by nearly 9% year over year, reaching 99 cents compared to 91 cents in Q1 2024. That's impressive growth for a utility company. One of the things that sets NextEra apart is its massive renewable energy pipeline. In Q1 alone, they added 3.2 gigawatts of renewables and storage to their backlog, including solar, wind, and batteries. They now expect to operate over 70 gigawatts of generation and storage by 2027. That's one of the largest clean energy portfolios in North America. Now let's talk dividends. NextEra continues to target 10% annual dividend growth through at least 2026, and they've grown their payout every year for more than a decade. What's backing up this dividend? Strong operating cash flow. The company expects it to grow at or above the EPS growth rate of 6 to 8% annually through 2027. That means this isn't a stretched or risky dividend. It's well supported by the business fundamentals. Despite this growth, NEE trades at a historically low valuation due to market concerns over interest rates and utility sector headwinds, but the fundamentals remain strong. In a world shifting rapidly toward clean energy, NextEra Energy is building the infrastructure and scale to lead the way, while still rewarding investors with consistent, growing income. That combination, growth, yield and stability, is hard to beat. Thanks for watching, and if you found value in today's video, give it a thumbs up and consider subscribing for more smart, long-term investing ideas. Stay patient, stay consistent, and keep building your path to financial freedom. Until next time, take care and happy investing.